What is going on, everyone? Welcome back to Sin City Crypto. I'm David. I'm joined with Robin, and today we are talking about more fallout from FTX. Genesis trading has halted all operations. What does this mean for Gemini? What does this mean for the overall cryptocurrency markets? Let's not waste any time and get right into it. So I'm going to first start with this article published on October 3rd from CoinDesk. So just a little quick background about Genesis. So they have a parent company named DCG Digital Currency Group, which owns Genesis. They own CoinDesk. They own Grayscale Bitcoin Trust. So this thing is all tied together. But right now we're focusing on Genesis. Again, October 3rd, the headline reads, Grayscale takes over key role for Bitcoin Trust, other products from Genesis. So did they know something was brewing? Grayscale Investment is bringing a key administrative role for all its products in-house through a newly created broker-dealer unit. That means it will now be responsible for creating new shares of the trust and selling them to investors. Previously, Grayscale outsourced this role to Genesis Global Trading, which now news did break that they have shut down operations, halted all withdrawals and loans. This is a quote from Grayscale. Today, Genesis remains our sole liquidity provider, and we've had nothing but a positive relationship with them going back to 2013. So I can't see a need to expand. Well, obviously, that sentiment probably has changed. We're going to move on to a direct tweet from Genesis on November 8th. So 8 days ago, when this whole FTX debacle started, they tweeted, with regard to today's market events, we have managed our lending book and have no material net credit exposure. In addition, Genesis has no exposure to any tokens issued by centralized exchanges. We continue to meet the needs of our clients around the world across all products. They go on to say our experienced trading and risk management teams are constantly assessing credit volatility and liquidity in the market to optimize our positioning and operations. And then bombshell dropped. FTX, Genesis, and Gemini hit in crypto chaos. Genesis Global Capital has temporarily suspended redemptions and new loan originations following this spectacular collapse of the FTX exchange. Not sure if spectacular is the right word to use there, but the firm cited, quote, extreme market dislocation and a loss of industry confidence caused by the collapse of leading crypto exchange FTX last week. The firm maintains that other parts of the company are still in good standing. And here are the ripple effects that we have been talking about. As a result of Genesis pausing its lending business, crypto exchange Gemini has halted its Earn program. Gemini customers with assets deposited into the Earn program will no longer be able to receive their funds back within 5 business days, as stipulated in the program's SLA, also known as the Service Level Agreement. Gemini, it's a quote from Gemini. Gemini is a full reserve exchange and custodian. All customer funds held on Gemini are held one-to-one, are available for withdrawal at any time. Stop there if you've heard that sentiment before. And speaking of stop there, I'm going to stop there, Rob. I want to get your opinion. Does this at all surprise you?
It should surprise me. It should be shock and horrific, but we've heard this song and dance before. This is from the playbook that we saw from Voyager. This is from the playbook that we saw from FTX. And to say that, hey, yes, you see smoke, but there's no fire here, we're good. It's asinine. And, you know, to think that this is 100% contained into their lend program or their into their Earn program, I think is foolish. And I think the true test is going to come from when the users and also institutions go and withdraw their funds. Is there enough capital? Are they backed one-to-one? Are the assets on the back end that can fulfill the exit liquidity?
The important question, Robin, is are there liquid assets?
Yeah, because it doesn't really matter if you own the asset if it can't provide liquidity. So if the asset is illiquid, it's pointless.
It counts as zero. Yeah. It should count as zero.
Yeah.
You know, I believe and I believe and I hope that this will change, that moving forward, anything you put on your asset balance sheet, if it's not liquid, it shouldn't be counted. When you do an audit and you say, oh, customer funds are back one-to-one, if those assets are not liquid, If you have Ethereum, but it's staked, if you owe money or if you hold token that there's no liquidity for, that should not count as assets on your balance sheet. And that should not go towards your audit of proof of reserves. If you agree with me, comment down below. So here's what the fallout from the Genesis news. Here's what happened. Crypto exchange Gemini reports broad outage, says client funds are secure. Every single time Gemini has come out with a statement, they always follow up with assets are secured. Customers are fine. You can withdraw at any time. Okay. I'm not saying Gemini is insolvent. I'm not drawing that conclusion, but there is trouble brewing enough for me to tell you to take your money off of the exchange. And no, it's not FUD. This is what we're seeing. And this is just the beginning. If we don't learn from our mistakes, we will continue to make the same mistakes over and over again. And so this article goes on to say their exchange is offline. The outage is affecting a number of services, including trading, fiat deposits, and withdrawals. Gemini is investigating reports of potential service disruptions. All customer accounts and funds remain secure, completely secure. Again, same thing. Funds are fine. Funds are fine. Funds are fine. Gemini announced that its Earn unit will be unable to meet customer redemptions in the SLA agreement, timeframe of 5 days following the disclosure by Genesis that they have halted their operations. Gemini did tweet and say, we experienced an Amazon Web Service EBS outage with one of our primary databases. We have restored the database and are bringing the exchange back up, to which it's been confirmed they are fully back online. All customer funds, again, guys, here's another. All customer funds are held one-to-one. So obviously, whether it's in traditional banking or it's in cryptocurrency exchanges, a bank run negatively affects your business. And if you don't have your T's crossed and your I's dotted, you could go under. If enough customers request to withdraw from your platform, you will go under. You will halt withdrawals and you will become insolvent. I'm going to pull up this article from Gemini. For Gemini from Yahoo. The Gemini dollar, the GUSD, their lending rates have spiked as high as 73% on Aave amid the news of the Genesis freeze. I'm going to make this a little bigger so you guys can see. Gemini dollar lending rates on DeFi lending protocol Aave soared as high as 73% on Wednesday after Gemini announced that withdrawals from its Earn product may be delayed. There are two likely reasons that these rates would spike above 50%. The first is that speculators are attempting to short the asset. Second, liquidity may be fleeing the pool and be converted to an alternative asset, which to me makes the most sense. Well, they both make extreme sense. But here you go, 73% if you want to borrow GUSD. And if you're not familiar with how shorting works, you borrow the token or the stock and you agree to sell it back at an agreed upon price. And so that's how you short a coin. But you need coins to be available to borrow in order to short them. So I'll stop there before I move on. And Rob, I want your thoughts on this. Are we seeing something similar to what we saw with Luna and how that was shorted? What we saw with Celsius token, how that was shorted? Are we seeing the same thing? And are we going to see the same thing play out in the end where Gemini goes insolvent?
Well, people are always going to make money in the markets, and no matter what direction they move in. So people are going to put in short positions if they feel like evidence is pointing that direction. That's just what investors do. And if that basically gets the ball rolling or it nudges the company to go insolvent, if that's the catalyst, then hey, man, that's the direction we're going. Like I said before, it all depends on, did they use funds illicitly? Did they move them? Are they locked up somewhere? Because if that's the answer, shorting the stock is going to make this ball roll that much faster. I don't know, man. It's just, I think we're in uncertain or uncharted territories. Last bull market / bear market cycle, where in 2017 you had the rise of the ICOs, and you didn't see institutional failures. I mean, you had the BitConnect that was, small in comparison to what we have now. You had the Mt. Gox that was pretty big, but that was at the infancy. Now you're involving both institutions from traditional finance, and all the big institutions now are all intertwined. So this mess is a lot more complex than it was in the past. And so I would just be very wary. I know we've said it 1,000 times already. If you have exposure to a centralized entity, whether it's an exchange, a lending platform, some kind of wallet that's that's not on chain, or some kind of wallet that's not on cold storage, might need to reevaluate all of that. We do advocate for your own keys, your own crypto, hardware wallets, and
by the way,
that's my like. If you're listening and you haven't done that yet, you're taking risk.
Speaking of hardware wallets, if we really like the Ledger, and if you don't have one, you want to buy one and support the channel, we do have a link in the description of this video. But to be fair, because there is nothing for us to gain or lose if Gemini goes under, and so to be fair, not all is bleak. Okay, so they're not lying about them having no exposure to FTX. That is 100% true, as we can see here from CryptoRank.io. This is Gemini, their investments and their portfolio. So we can take a look at the tokens that they have invested in: Sandbox, 1inch, Zbeck Protocol, blah, 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 blah. But more importantly, their funding rounds, to which I don't see on here FTT or FTX, which is good. Okay? Which is good. To be fair, this is good. All right? Also, some more good news. Binance's CZ is looking into acquiring Genesis loan book, which, if that does go through, means that chances of the Gemini Earn program brought back to life and people being made whole gets a lot better, right? So CZ is reportedly interested in acquiring Genesis loan book. Genesis includes 2.8 billion in active loans. And just so you guys understand the level of importance Genesis plays, they are the largest BTC. They're the largest Bitcoin OTC desk in the space, the largest, and they just halted all their operations, their withdrawals. So another source, though, going back to this, noted that any approach is likely to be rebuffed by Genesis parent company, Digital Currency Group, and that a figure north of 2 billion would need to be floated. So it sounds like the parent company is going to step in and say, if you're not offering at least $2 billion, we're not even going to entertain it. So ask yourself this question, and this is a question for you as well, Robin. Do you think CZ is going to come in with at least $2 billion to take over Genesis, their loans, and their loan book?
I don't think so.
Chances likely or unlikely? And of course, this is opinion.
I just think that right now is not the time to be throwing around $250 million. I really don't. We saw the attention that FTX brought when it was buying up this company and that company. That's a bad look. It was last month that FTX is like, we're buying Voyager, we're buying this company, we're gonna buy this company. It's just right now, I don't think that's what Binance needs. Binance just needs to keep their head down. They were already gonna have a congressional hearing where they're gonna be brought into question their role in the FTX's collapse. I just think that it's like, hey, man, just keep your head down and tread water through the bear market, man. I mean, but I wouldn't take too much into them buying they're just buying the debt. So it's just like, someone, say you have debt and collections. It moves from one party to another. Somebody else buys your debt. It's the same thing. And so they're not buying their company. They're just, hey, how many loans you have? Who owes you? We'll buy your debt at discount.
Also, if you want more information, we did cover this specific topic. We also covered Nexo as well, and why we think Nexo might be in trouble. But if you have not done so already, go ahead and go on our main page and look for this video right here. Will crypto survive? Go watch that video. We put this out 4 days ago. We covered a little more in depth with the Gemini situation with Nexo, and also just to show you guys how massive of a company Genesis is and the possible ripple effects from Genesis going under. They had over $8.4 billion in loan originations in just Q3 of this year, in just 3 months. Their total active loans, 2.8 billion. Derivatives notional value traded, 18.7 billion in Q3. Also, close to $10 billion in spot volume traded in Q3 of this year. So you might not have heard of Genesis, but they are a major player. They're a major contributor in our space, and their downfall could lead to the downfall of many others, including Gemini. Let us know what you guys think Is Gemini in trouble, or do you think they're fine? Let us know in the comments. That'll do it for the video. On behalf of myself and Robin, thank you so much, and we'll catch you guys in the next one.